Have you ever wondered why the price bounces exactly at that green line on the chart? You're looking at something that millions of traders around the world are also watching, the moving average. But here's the truth no one tells you. 95% of traders use the moving average the wrong way. I used to be the same. Then, I started digging deeper, observing the market for real, testing strategies with my own capital, and I discovered things no one tells you in books. There's a way to turn the MA from a lagging indicator into a powerful trend-following weapon. There's a spot where the price often bounces back so precisely, it's almost unbelievable. There's a secret that makes long-term MAs, like the 200 MA, become the fortress for big money players. If you're ready to break out of the mold and understand how real pros use the moving average to profit in real markets, then stay tuned until the end of this video. The 200M become the fortress for big money players. Chapter 1. The real purpose of moving averages. Moving averages are not crystal balls. They don't predict the future. It is filter out the noise of random price movement and show you the underlying trend. Moving averages smooth out price action by calculating the average price over a certain number of periods. The most common types are simple moving average SMA. Each candle in the period is weighted equally. Exponential moving average EMA. More recent candles are given greater weight, making it more responsive. So why does this matter? Because in the real world, especially in volatile markets like crypto, price is noisy. There are wicks, fake-outs, and short-term manipulation. The MA helps you zoom out from that chaos. Here's a rule of thumb I personally use. EMA 20/50ths. Great for short to mid-term trends. SMA 100/200ths. Ideal for spotting long-term sentiment shifts. But again, it's not about blindly following the line. It's about understanding the relationship between price and its moving average. Chapter 2. How to use moving averages to read trend like a pro. One of the most useful roles of moving averages is trend detection. Here's how I break it down. Price above a rising MA, bullish trend. Price below a falling MA, bearish trend. MA is flat, price chopping through it, sideways market, avoid. The angle of the MA matters. A steep slope indicates strength. A flat one signals indecision. Here's a personal example. In late 2020, I noticed Bitcoin hugging the 20 EMA on the daily chart. Every time it dipped to that line, buyers stepped in hard. The angle of the EMA was rising steeply. That wasn't just trend. That was momentum. I entered longs on pullbacks and rode the wave. Chapter 3. Moving averages as dynamic support and resistance. The untold power. Think of it this way. While traditional support and resistance lines are static, drawn horizontally, moving averages move with the market. They adapt, they flow, and they often tell a more current story of where traders are reacting. Let's bring this to life with a real example. Back in mid-2021, I was trading Ethereum on the 4-hour chart. The 50 EMA had acted like a trampoline for price. Every dip to that average was met with buyers stepping in aggressively. Now, most new traders would have drawn horizontal support, but they'd missed the subtle higher lows forming directly on the EMA. That's where the real magic was. So here's what I did. I waited for the price to retrace, kiss the 50 EMA, and form a bullish engulfing candle. Classic price action confirmation. I entered long with my stop just below the EMA and the previous swing low. The risk-reward, 1 to 3. The result. A clean breakout and 12% gain in under 36 hours. Lesson. When the moving average holds repeatedly, it becomes a self-fulfilling prophecy. Traders start placing their buys there. Algorithms start firing. The area becomes a magnet for liquidity. But be careful. It doesn't work in all conditions. You need trend. In ranging markets, moving averages are no better than rolling dice. But during strong directional moves, they're gold. And here's a quick pro tip. The 20 EMA on the 1-hour chart and the 50 EMA on the 4-hour, two of the most respected dynamic support, resistance tools in crypto trading. Watch how Bitcoin dances around them. It's poetry.